Tonight's presentation, a matter of policy. Our presenter is Mike Busch. Mike is president of Savvy Aviation Incorporated. He's an author for numerous aviation publications over many years. Holds a certified flight instructor certificate, A&P mechanic certificate with the inspection authorization privileges. 2008 FAA's Aviation Maintenance Technician of the Year and a member of EAA. Mike, thank you so much for being with us tonight. I know you got a lot to cover. I'm going to turn control of the presentation over to you.
Good evening, everybody. My last webinar before AirVenture. The tension is building. I've got a dozen forum presentations this year up at Oshkosh, and so I will be very, very busy getting them all prepared over the next couple of weeks. So at any rate, as Tim mentioned tonight, we're going to be, the title of the presentation is a matter of policy. We're going to be talking about aircraft insurance, a little bit different topic than I usually speak about. Hopefully is relevant to almost all of you in the audience. If you own an aircraft, you probably have aircraft insurance, but whether you have the right amount of the right coverage is a question that's worth exploring. We're going to be talking about a lot of this stuff tonight. Now, I've been an aircraft owner for more than 50 years, so I've been a consumer of aircraft insurance for a long time. I've owned 3 different airplanes. I've insured my airplanes with probably a half a dozen different underwriters over that 50 some odd year period. But I hardly hold myself out as an aircraft insurance expert. So when it came time to write my newest book, which is just out, I'll be talking to you about that at the end of the webinar. But my latest book on aircraft ownership, I felt it was important to have a chapter about aircraft insurance. And so fortunately, my company has a close business relationship with one of the leading light aircraft underwriters, Global Aerospace, also happens to be the company that underwrites the EAA insurance program. And so I'm on a first name basis with a bunch of industry veterans. And so I spent about 5 hours picking the brains of both the chief underwriting officer and the chief claims officer of Global Aerospace, took copious notes, and I wanted to share with you what I learned from these guys. Some of it was stuff I knew already. A lot of it was stuff that I didn't know. So I hope you'll find this interesting. Let's start at the beginning and talk about an insurance policy. All insurance policies are contracts. They're contracts between 2 parties. One is the insurer, who underwrites the insurance, and the other is the insured, who is typically you. And it's a contract in which the insurer promises to pay some sort of benefit to the insured, to you, if certain well-defined events occur, provided that you, the insured, has paid the agreed to premium, which is typically paid on an annual basis or sometimes on installments, and has met certain other conditions of the policy. Now, policies are contracts, but they're a special kind of contract. They're what are known in the law as contracts of adhesion, meaning that the contract is not really negotiated between you and the insurer. The contract is offered by the insurer pretty much on a take it or leave it basis. These are called contracts of adhesion. Contracts of adhesion, specifically insurance contracts, can be a trap for insureds like you and me for a couple reasons. First of all, most often we don't get a copy of the policy until after we've bound the coverage. So it's this peculiar situation where we buy the insurance first and then find out what it is, which is clearly not the way things should be done. But most aircraft owners don't get to get a copy of their policy until they've bound the insurance. And even after they've bound the insurance and the insurance company sends them a copy of the policy, most aircraft owners just stick it in a file. They don't read it. So then when something bad happens and you have to make a claim, a lot of owners really don't understand exactly what their insurance covers and what it doesn't cover and what the terms and conditions are and what their obligations are and so on. Now, the good news about contracts of adhesion is because they're take it or leave it contracts, if there are ambiguities in the contract, the courts generally will interpret those ambiguities in favor of the insured, because this was a contract that was essentially forced on the insured by the insurer. The insured didn't really have an opportunity to negotiate the terms and conditions of the contract. So in general, the courts are spring-loaded in favor of the insureds rather than the insurer. And that's true, for example, if there's some ambiguity as to whether some kind of event should be covered by the insurance or not. If there's any doubt, generally the courts will rule in favor of the insured. And for that reason, most insurance companies bend over backwards to accommodate insureds. A lot of pilots seem to think that insurance companies will do anything they can to weasel out of settling a claim. But in my experience, it's quite opposite to that. The insurance companies are very good about settling claims. And the reason they're very good is because if they don't do the right thing and you wind up taking them to court and in what's called a bad faith lawsuit, most of the time they're going to lose. So they don't want to go through that, and so they generally are pretty stand up as far as how they deal with claims. And I'll give you an example or two later on in this webinar. Now, insurance policies can appear intimidating, but they're really not that complicated, especially if you know what to look for. All policies consist of two sections, the declaration and the policy form. The declaration is usually just 1 page long. It's usually the first page of the policy. And it identifies all of the critical information about the policy that's unique to your particular situation. It identifies you as the insured, identifies the aircraft or singular or plural that are being covered. It identifies who's underwriting the policy, who the insurer is, what the policy period is, when it starts, when it stops, what the premium amount is, all of the different kinds of coverage that the policy includes, and we'll talk about those different kinds of coverage in a moment, and what the maximum coverage limits are for each kind of coverage, any applicable deductibles, all of that stuff is typically on the first page of the policy. It's called the declaration page. Now, a typical light aircraft policy has 3 different kinds of coverage. It has coverage for bodily injury and property damage to others, which is generically called liability coverage. It normally includes coverage for medical payments, and it also will, in most cases, include what's called hull insurance. That is insurance to cover physical damage to the aircraft if the aircraft is damaged in some sort of an accident or event. It is the hull insurance component that will pay to repair it, or in some cases write you a check so you can buy another airplane, depending on how serious the damage is. And we'll talk about all of that. So that's the stuff that is all covered on the declaration page, what these kind of coverages are, what the limits of the coverage is, and any deductibles that might apply to those coverages. The rest of the policy is called the policy form, and it's basically the boilerplate part. It's pretty much standard for all of the policies that the particular insurer, the particular underwriter writes. And it normally includes 4 elements. It includes a definition section that defines terms. It includes the insuring agreement that basically says what each party is obligated to do. It normally contains an exclusion section that makes quite explicit what things are not covered by the policy, and a condition section that discusses what conditions you need to meet in order for the policy to cover you. Things like having a current medical or having the airplane in annual and that sort of thing. Now, we buy all sorts of insurance, not just airplane insurance, but we typically insure our houses and our cars and life insurance and so on. And in many, many areas of insurance that we buy, property and casualty insurance, things like auto insurance and homeowners insurance, there are industry standard policy forms. They're called ISO forms that are used by almost all insurance companies. So regardless of whether you're insuring your car through, Geico or Allstate or Progressive, the terms and conditions of the policies are usually pretty similar because they tend to be industry standard. However, there is no such standardization at all among the underwriters that write insurance for light aircraft. Every company's policy is different. And as a result of that, it's particularly important to look at the policy before you buy it. And when you're deciding who to insure with, which underwriter to insure with, it's really important to understand how each insurer's policy is written. Again, most aircraft owners never do this. They typically get a bunch of premium bids from their broker, and they'll often just pick whichever one comes in lowest without really looking at the policy form. But in aircraft insurance, it's particularly important to look at that because the different companies have different different kinds of policy forms, and that's something that most aircraft owners don't do. Now let's talk about how much coverage one ought to have, and let's start with liability insurance. Liability coverage is what you buy in case you hurt somebody or something or cause a wrongful death or whatever while operating your aircraft. These are the kinds of claims that if you don't have insurance could have a massive impact on your financial life. The coverage is actually more than what is written on the declaration page. Like if you have $1 million worth of coverage, the $1 million is important because it's the maximum damages that the policy will pay in case somebody sues you and you lose. But more importantly, the policy pays for your defense, pays for your legal fees. And if you die in an accident, it pays to defend your estate. And often the cost of the defense is very, very high, and it's not capped by the amount, the coverage amount of the insurance. The company has to pay to defend you or to settle the case, and because legal fees can be extremely expensive, especially in things like wrongful death suits. The companies tend to be pretty highly motivated to settle these cases rather than to let them go in front of a jury. I do a lot of expert witness work on cases like this, and it's very, very rare that these cases actually wind up being litigated in front of a jury. They mostly settle. Now, as far as the coverage, liability coverage is concerned, there are two different kinds. Coverage may provide what's called a combined single limit, a single smooth amount that the policy covers, like $1 million combined single limit, which are colloquially $1 million smooth. Or it may be subject to per person or per passenger sublimits, something like $1 million limited to $100,000 per person. So let's talk about that. Now, the smooth coverage without sublimits is expensive. And as a result, something like 90% of all light aircraft policies are written with sublimits. But sublimits can severely reduce the amount of liability coverage that you have. So anybody with any sort of assets really should try hard to get smooth coverage, even though it's more expensive. The sublimits come in two varieties, per passenger and per person. A per passenger sublimit limits the amount that your policy will pay for injury or death of an occupant of your aircraft. Now, this is, again, other than you. But if you are carrying passengers in your aircraft and they get hurt or killed in an accident, and you have a per passenger sublimit, that will cap the amount that the policy will pay for injury or death to that passenger. Now, a lot of people think, well, I'm not really too worried about that because the only people I ever take in my airplane or family and friends, and I don't carry strangers in my airplane, so I'm really not worried about being sued. That's not valid logic. If you're flying with your brother or sister or your closest friend, and they die in a plane crash, it's a good bet that your passenger's widow or your passenger's kids will hire the most aggressive personal injury lawyer they can find to sue your estate and make sure that your spouse or kids wind up with as little as possible and they wind up as much as possible. The passenger may be a really close friend, but if he gets killed, his family may not be your friends. So it's really important to try to get as much coverage as you can, and these sublimits can tremendously erode the amount of coverage that the policy provides in the case a passenger is hurt or killed. In addition to per passenger sublimits, some policies are written with per person sublimits, and it's a subtle difference in wording, but it means a whole lot because a per person sublimit not only limits the amount the policy will pay if a passenger is hurt or killed, but will limit the amount that somebody on the ground or property on the ground that's destroyed by a plane crash. It will limit what that will pay. So if you crash into a schoolyard full of kids, that's the horrible scenario, and you have $1 million worth of insurance with $100,000 per person sublimit. It's only gonna pay $100,000 per person, even if they're injured on the ground. So per person sublimits are a lot worse than per passenger sublimits, but all sublimits will seriously reduce the amount of coverage you have. Every aviation insurance underwriter I've talked to, every aviation insurance broker I've talked to, all recommend avoiding sublimits if you possibly can, and buying as much liability coverage as you can possibly get. Sometimes it's hard to get Smooth if you're not an attractive insured, considered a high risk insured. We'll talk about how insurance companies determine how risky they think you are shortly. There are some companies that if you're a risky pilot will not offer you smooth coverage if you're a first time applicant, but if you qualified for smooth coverage earlier, they'll usually grandfather you in and continue to offer it. But if you possibly can get smooth liability coverage, it's a very good idea. Now let's talk about hull insurance. This is a little bit more tricky because with liability insurance, it's easy. You buy as much as you can afford, and higher your net worth, the more you ought to buy. In the case of hull insurance, excuse me, it gets a little bit complicated. Aircraft insurance policies are different than what we're used to in automobile policies because they're not replacement value policies. The policy has a stated value for the aircraft, and you determine what stated value you want to insure for when you bind your coverage every year, and that's the amount of the hull coverage. If you try to insure for some outlandish amount of hull coverage, the insurance agent will probably try to convince you otherwise. But how much you insure the hull for is pretty much up to you. So if you wind up having an accident and you make a claim, the insurer will wind up doing one of two things. He will either pay the cost to repair your airplane up to the stated value of your hull insurance minus any applicable deductible, or alternatively, he may make a determination that your aircraft is a constructive total loss and write you a check for the stated value less any deductible and take your airplane and sell it for whatever salvage value he can get. And the choice as to which of those to do is usually made by the insurer, although in close cases, there's usually some discussion between the insurer and the insured as to which way the insured wants to go. But the insurer basically has the right to do whichever of those two things is in his best interest. So which of those two things happened is determined sometimes by the policy language, by the amount of the repair estimate, by how much the stated value of the policy is, and sometimes negotiation between the insurer and the insured. Just as a guideline, many aircraft policies specify that an aircraft will be considered a constructive total loss if the estimated cost to repair exceeds 70% of the stated value. That's one of the guidelines that insurance companies use for making a decision as to whether to total the aircraft or not. So given that as background, let's talk about the effect of how much insurance you carry on the hull. Some owners will underinsure their aircraft for less than it's actually worth because their premiums are lower if they do that. The risk of underinsuring the aircraft is pretty obvious. If you have an accident, let's say a gear up, for example, that does minor damage to the aircraft, and the airplane is underinsured, the insurance company may decide that it's cheaper to just write you a check for the stated value, the low stated value, and then sell the airplane for salvage rather than to let you keep the airplane and pay it for repairs. And aircraft owners who have an accident where the damage is relatively minor don't like losing their aircraft, don't like having the insurance company take it away. And if they underinsure the aircraft and the insurance company declares it a total loss and writes you a check, and you underinsured, that check is not going to be enough to replace the aircraft. The other side of the coin is overinsuring. Other owners overinsure their aircraft. A lot of owners have a inflated idea of what their aircraft is worth, and they tend to put a higher stated value than they really should. And the problem with doing that, besides the fact that you're paying a higher premium for higher a higher coverage limit, is that if you severely damage the aircraft and the amount of coverage is high enough, then the insurance company might not total the aircraft, even though you want them to total the aircraft. They might insist that you repair the aircraft, and they'll pay you to repair it. And if the airplane is severely damaged, that may leave you stuck without an aircraft for months or years while the airplane's being repaired. And then you wind up getting your airplane back with extensive damage history, which impairs its resale value. So that's not such a good thing either. If the plane had been covered at a more appropriate level and it gets into a serious accident, then the insurance company will declare it a constructive total loss if the cost to repair is over 70% of the stated value. And then they will write you a check so you can buy another airplane and get back in the air. And then they'll take the wreck and get whatever salvage value they can out of it. So both underinsuring and overinsuring are perilous. Underinsuring is bad if you have a minor accident. Overinsuring is bad if you have a major accident. Of course, you don't know what kind of accident you're going to have. So in general, it's best to insure the whole value for what it's really worth, what you could realistically sell it for if you had to, or what you could realistically buy a replacement airplane for if you had to. And so it's a good idea, and I've been doing this for many years, that once a year before your policy comes up for renewal, go make an assessment of what your aircraft is actually worth. And it may be more or less than it was last year. It may be, for example, that you overhaul the engine, or that you put some new avionics in the airplane, which would increase its value. Or it may be that the market is soft for the kind of airplane you have, and the value has decreased. But it's a really good idea once a year to try to check what the value is actually worth. You can go to places like Trade a Plane and Aircraft Shopper online and check the asking prices of comparable aircraft. Typically, the aircraft will wind up selling for, maybe 5 or 10% less than what the asking prices are. So you can get a pretty good idea. You can also use valuation services like VREF or Aircraft Blue Book. If you're an AOPA member, you can use VREF free as part of your AOPA membership. And so you get a pretty good idea of what the aircraft is actually worth now, which may be different than what it was last year, and adjust the amount of hull coverage accordingly when you renew your policy. Just to give you an idea how these things work out, this was an actual case of an owner of a Cessna 172 RG who wound up having a gear up landing, and the damage was minimal. You could see in the picture, it suffered minor belly damage. The outer 4 inches of the prop tips got curled back. The engine had only about 100 hours since major overhaul at the time of the incident, and it needed to go undergo a teardown, post-prop strike teardown. So the airplane was going to need a post-prop strike engine teardown, at least new blades, if not a new propeller, and some minor belly repairs. Airplane had nice avionics, a low-time engine. The owner assumed that this would be covered by insurance. here's how things worked out for him. He had insured his hull for $60,000. The insurance company made a determination that it could get $15,000 by selling the aircraft as is at salvage. So the insurer is not going to pay any more than $45,000 to repair the airplane. Otherwise, it's cheaper for them to total it. So the adjuster and the owner picked a repair shop and asked them for a flat rate bid on the repairs. The repair shop gave a flat rate bid of $41,000 to repair the airframe and to perform the post-prop strike teardown and put a new propeller on the airplane. But they made it clear that if during the post-prop strike teardown, any bottom end damage was found that would require, say, replacing the crankshaft or replacing cylinders or whatever, that was not covered by the flat rate bid because they didn't know what the internal condition of the engine was, and so that could increase the cost to repair up to $20,000. And this is fairly common, that there's going to be some uncertainty when you're looking at repairing the airplane. So the insurance company said, well, this is kind of a borderline case, and went to the owner and said, what do you want to do? And so the owner had to think this through. If he chose to repair the airplane, which he wanted to do because it was in good shape and it had modern avionics and a low time engine, in the best case, if the repair came in for just the $41,000 or a little bit more, insurance would cover it. But if the teardown determined that there was internal engine damage, then the owner might be out of pocket for $20,000. On the other hand, if he chose to have the insurance company total the aircraft, then he'd get a $60,000 check, and the insurer would take the airplane away and sell it at salvage. And it was a pretty valuable wreck because it had a lot of nice radios and a low time engine. So this puts the owner in sort of a predicament. He doesn't really want to lose his airplane. It's minimally damaged, but he also doesn't want to pay $20,000 out of pocket, which would leave him seriously underwater and owning an airplane that had somewhat impaired value due to the damage history. This predicament was due to the fact that the owner had overhauled the engine, put some new avionics in the airplane, and had neglected to increase the amount of his hull insurance. And the $60,000 just wasn't enough to replace that airplane. He was in the underinsured situation. So these things can get a little bit complicated. And there's a certain amount of luck of the draw in how these things come out. But the important thing is that every year when you insure your aircraft, make a good faith effort to try to find out what the airplane is actually worth, and adjust your hull coverage accordingly. Another thing aircraft owners don't think about very much is whether or not they're actually flying. Sometimes the airplanes are down for some period of time. A typical aircraft policy covers all risks, including events that occur in flight or on the ground. But insurers also offer lesser coverages. They offer not in motion coverage or not in flight coverage, which is much, much, much cheaper. Not in motion coverage is appropriate when you know your airplane is not going to be moving under its own power, say, because it's down for some extensive maintenance that's going to keep it on the ground for, a couple months. Not in flight coverage also provides coverage for taxiing the airplane, but not flying the airplane. So it makes sense to opt for these lesser coverages when you know the airplane's not going to be flying. Maybe it's down for extensive maintenance. Maybe it's used only during certain seasons and during, 3 months out of the winter, the weather's too bad to fly. Maybe you've gone abroad with the family for a month and a half, and the airplane is not going to be flown because you're gone. And you can switch your coverage from all risks to not in motion or not in flight. Most insurers will let you do that once a year. You can switch from all risks to ground only, and then from ground only back to one to all risks once a year. They don't want you flipping it on and off like a switch, but it's good to know about, because you can save yourself some money by reducing coverage to ground only coverage when the airplane's not going to fly. I actually learned about this in 1987 when I first bought my Cessna 310. That's me in 1987, and that's my airplane with the old paint job on it. When I went to insure this twin that I had just bought, and that was my first twin, I discovered that nobody wanted to insure a low-time pilot in a piston twin. Even though I had thousands and thousands of hours in retractable singles, I didn't have any significant twin time. Just the time that I had getting my multi-engine rating. And so there were a couple of companies that were willing to insure me, but the premiums were absolutely astronomical. And my broker suggested that if I was willing to insure the airplane for not in flight only hull for the first year, I could save a whole lot of money. And then by the second year, I would have enough time and type and time in twins that I would be able to get a decent premium. So I thought about it and kind of came to the conclusion that, if I could get through a year without forgetting to put the gear down or hitting an eagle, that was a risk I was willing to take. So I did that. My very first year flying the twin, I insured it for not in flight coverage. So I was covered while I was in the hangar. I was covered while I was taxiing. If somebody ran into me on the airport, I was covered. But when the wheels were off the ground, I was not covered for hull. And I fortunately got through that first year with nothing bad happening. And the second year, I got a much more reasonable premium bid, and I carried all risk coverage since then on the airplane. So it's a useful thing to know about. Okay, let's talk about the system of underwriters and brokers. As of right now, there are roughly a dozen different companies that offer light aircraft insurance, a dozen different underwriters. Some of these companies are multi-line insurers that insure lots of stuff besides airplanes. Some are strictly dedicated to the aerospace market. Global Aerospace is one of those. The number of underwriters in the business has fluctuated a lot in the 50 years that I've been a customer for this insurance. Sometimes there are a lot more players in the business. Sometimes there are a lot less. There's kind of a cycle that goes on. When there are more underwriters in the insuring light airplanes, there's more competition, and it drives insurance premiums down. And that's kind of a good thing for us as consumers. But the lower premiums tend to squeeze the weak underwriters out of the business. And so the number of underwriters goes down. The reduced competition causes premium to rise, and the cycle repeats. So there's a cycle that lasts, 5 or 6 years of more and less players in the business. Right now, there are about a dozen. With one exception, and the exception is Avemco, but all of the other underwriters in the business offer their policies through brokerage agencies. They don't deal directly with aircraft owners. They work through brokers. And the broker basically wears two hats. On one hand, he works for the insurance companies and he provides a distribution system for them. And on the other hand, he works for the aircraft owners who are his clients, and he provides advocacy for the aircraft owners. So if you have a claim, he's supposed to fight for you and get the insurance company to pay the claim. For doing all of this stuff, the brokers make a commission of typically 15 to 20% of the premiums you pay. So 15 to 20% goes to the broker, and 80 to 85% of the premium goes to the underwriter. And in exchange for this commission that goes to the broker, you're entitled to receive a good deal of service from that broker, but often you won't receive it unless you ask for it. Every broker will sell you the insurance. They'll typically shop your insurance every year with various underwriters, present you with an array of premium quotes. A lot of aircraft owners simply go for the lowest bid, but that's really not a great idea. What I would suggest is that before you choose an underwriter each year, you ask your broker two questions. One is, which of these companies offers the broadest policy forms with the fewest gotchas? Because as I said, the policy forms differ quite a bit from one insurer to another. And most of the time, aircraft owners don't bother to read these policies. They just pick whoever gave the lowest premium. The second question is, which company offers the most efficient and hassle-free claim service? And if you have a seasoned broker who's experienced in the business, he will be able to answer those questions for you because he's been through a lot of claims, and he knows what the terms and conditions of the policies are for the different underwriters. And if you have a less experienced broker, he might not be able to answer those questions. So it's always good to get a senior guy as the broker you deal with. I've been dealing with the same insurance agent for, oh my goodness, probably 30 some odd years. And I'm 75, and I imagine he's probably about the same age, and there's probably pretty much nothing he doesn't know about this subject. So it's good to have somebody like that in your court. As I mentioned, there's a notable exception to this whole system, and that's Avemco. Avemco is unique in that it is a direct writer of aircraft insurance. It doesn't work through brokers. It sells insurance directly to aircraft owners, and it's the only one in the small airplane business that does that. Now, you might think that Avemco would be the lowest, the low price spread because it doesn't have to pay the 15 or 20% broker commission. It turns out that's not always so. I've frequently gotten quotes from Avemco, but for my particular situation as a older pilot flying a piston twin, Avemco has never come in as the low bidder. This is not my kind of insurance. It's not what Avemco is interested in doing. It's a good idea to get a quote from Avemco when you're checking out different insurance companies at renewal time, but you're going to have to get the quote from Avemco yourself because your broker can't. Avemco does not deal with brokers, so you'll get a series of quotes from your brokers, and then you can go online and get an independent quote from Avemco and compare them all. Now, talking about premiums and it's kind of amazing when you get insurance quoted what a wide range of different premium quotes you get, and this is all based on something that the insurance companies called rating. Underwriters use an actuarial rating formula to determine what premium to quote you, and each underwriter has its own unique algorithm, which they jealously guard as a trade secret. The rating formulas utilize the underwriter's loss experience with various kinds of aircraft and various kinds of pilots. They're partially mathematical, but there's also a fair amount of human judgment that gets thrown in when these quotes come out. But the interesting thing is that there is not a unified loss database. The different underwriters, and about 12 of them in the business right now, they don't share their loss experience data with one another. So each one quotes based on their own loss experience, and their ratings can differ greatly. For example, one company, say a company has had had to pay a couple of expensive claims for pit specials. They may wind up quoting higher premiums for pit specials than another company that hasn't ever had a loss on a pit special. Companies may have had problems with older pilots or with aircraft that are tied down in Oklahoma. And every company has their own private database of loss experience that they base their ratings on. So that's why the quotes can come in quite different from one underwriter or another, and that's why it's important for your broker to get you a series of quotes. It also turns out that depending on whether your situation is one that the insurance companies think is an attractive risk as opposed to an unattractive risk, you may have a dozen companies quoting, or you might have only one or two companies quoting, and the rest of the companies saying we're not interested in insuring that person or that aircraft. The underwriters consider lots of factors. Time and type as pilot in command in a particular make and model of aircraft involved is super important to virtually all the underwriters. It's more important than total time or pilot ratings, although those do get factored in, but time and type is really, really important. Pilots that are newly transitioning to more complex aircraft or higher performance aircraft tend to be considered much more risky until they have some time in the new aircraft. So that's the situation I faced in '87 when I moved from a high performance single to a twin. I was considered a very, very high risk pilot for that first year, and the premium quotes were quoted accordingly. The hull insurance, they consider whether the aircraft is hangared versus tied down outdoors. Obviously, if it's outdoors, it's more subject to environmental risks and airplanes running into it, that sort of thing. Geographical risk, Oklahoma is Tornado Alley, so if you're tied down in Oklahoma, you're going to be paying higher premiums than if you're tied down in Kansas, let's say. One that's particularly important to me these days, older pilots are considered riskier. Insurance companies tend to want to stay away from older pilots or quote them higher rates or offer them lower coverages. And it's quite difficult for a pilot that's 80 or over, a flying octogenarian. It really gets really hard to get insurance. And I've got a few more years before I get there, but that worries me. Certain kinds of aircraft are considered more risky. The tail draggers, twins, they don't like owner-flown twins. Float planes are expensive to insure. Warbirds, experimental aircraft. These are all kinds of aircraft that are considered to be on the riskier side. So all of these things factor into the rating formula. So if you're somebody like me, an older pilot flying a piston twin, you may only find one or two firms willing to quote. If you're a 30-year-old pilot flying a Cessna Skyhawk, probably all dozen companies will be happy to quote coverage for you, and then you get to pick which one you want. Hull insurance is something that tends to baffle a lot of aircraft owners as far as what it covers and what it doesn't cover. And sometimes this is very counterintuitive. So let's talk about this a little, about what hull insurance covers and what it excludes. Hull policies cover losses due to collision or storm damage or that sort of thing, specific, well-defined events, but they don't pay for repairs necessitated by the ravages of time or by usage. And almost every aircraft hull policy includes explicit inclusions for wear and tear, for mechanical and electrical breakdown. The wording can be different from one policy to the other, but the general philosophy is pretty common. It's important to understand that, and I'm going to give you a few examples of it, because it's not it's a little hard to get your head around. For example, in 2014, I was on my way to Oshkosh, and I was overflying Las Vegas, and had a problem with the right engine in my Cessna 310. A piston decided to shed a chunk of its skirt into the engine, filled the engine with aluminum. I made a single engine landing at Las Vegas and took an airliner to Oshkosh instead. Insurance did not cover that. That was an unexpected $40,000 major overhaul. And it would have been quite a bit more if I hadn't done the sweat equity to remove the engine and install it myself. But the insurance does not cover something like that. That's a mechanical breakdown, and almost every policy has an exclusion for that sort of thing. On the other hand, had I forgotten to tighten the oil cap before takeoff, and the engine seized in flight due to the fact that it ran out of oil, the replacement of the engine would almost certainly have been covered by insurance, because that was not a wear and tear thing. That was an extraordinary event, and that's the sort of thing that hull coverage is designed to cover. Or had I, in the stress of making a single engine landing, had I neglected to lower the landing gear and I had bellied in the airplane into Las Vegas instead of making a nice greaser landing on the wheels, that would have been covered as well. In fact, what almost certainly would have happened would have been that the underwriter would have written me a check to go buy another airplane, because if you do a gear up in a twin, by the time they add up 2 new props, 2 engine teardowns, and some airframe repairs, it's almost always over 70% of the fair market value of the aircraft. So gearing up a piston twin is almost always a constructive total loss, and the insurance company almost always writes you a check for that. And so my standing joke was, the only thing I did wrong in dealing with that engine failure is I forgot to remember to forget to put down the gear. But in any case, some of these things are a little bit astonishing. So one way of thinking about it, it's a slightly facetious, is that losses due to failure of gray matter are almost always covered, but losses due to failure of aluminum are generally not covered. That's a little more complicated than that, but it's interesting how this works in terms of what's covered and what's not covered. And even though mechanical breakdowns are not covered, physical damage that is caused by such breakdowns generally is covered. So the initial breakdown is not covered, but any collateral damage that's caused by the breakdown usually is covered. So, for example, if your engine throws a rod through the side of the case and punches a hole through the cowling, the insurance is not going to pay for your engine, but it will pay for the cowling repair. Or if your battery boils over and splashes acid on the firewall or the cowling, and the damages, they become acid damaged. The battery isn't covered, but the acid spill damage is covered as a one-time event. I say as a one-time event because you can't if you have the battery issue, and then 2 years later you discover acid spill damage, that's not going to be covered. It has to be proximate in time to the causing event. A particularly interesting case of this, just to show you how convoluted it can be, occurred with a friend and colleague of mine named Joe Godfrey, who flies a Belanca Super Viking. I used to own an airplane just like this, and they're really pretty nice airplanes, but they're unusual airplanes because they have a welded steel tube fuselage that's covered with Seconite, and they have wood wings, Sitka spruce structure with mahogany plywood covering. So Joe winds up putting his airplane in annual inspection one year, and the IA who was inspecting the airplane, who was not the IA that Joe was used to using, looks up in one of the inspection plates under the wing and discovers what he believes to be termite damage to the wing structure. This is a wooden wing. So he goes to the FSDO and he says, I just found termite damage in the wing of a Belanca. What am I supposed to do? Never run into anything like this before. And the FSDO guy says, well, what you're not going to do is sign off the annual as airworthy. The owner's going to have to go to Belanca and get a post-termite inspection procedure to determine whether the wing is airworthy or not. So Joe contacted the president of Belanca, and the president of Belanca conferred with his VP of engineering, and they came back and they said, Joe, we wouldn't have the slightest idea how to do such an inspection because we've never seen termite damage to a Belanca wing. So Joe is sort of between a rock and a hard place, and he is telling his story to me. And I said, Joe, I think insurance will buy you a new wing or a replacement wing, at least a serviceable wing. And he said, well, why would it do that? And I said, well, what if you came out to your hangar one day and discovered that a raging bull had gotten into your hangar and gored your wing? Would insurance cover that? And he said, yeah, sure it would. That doesn't sound like wear and tear. And I said, well, okay, how about a pack of wild dogs? Let's work our way down the size spectrum. I said, I can't see any reason why termite damage wouldn't be covered. And so made a few phone calls, and turns out that termite damage to the wing was covered, and the insurance company bought Joe a replacement wing. Sometimes these things don't come out exactly the way you expect, but the real issue is it a failure caused by the ravages of time and usage that's not covered, or is it some sort of an extraordinary event, and that is covered? That's really how hull insurance works. And finally, let me wrap this thing up so we can get a little Q&A in, and just mention a couple of other kinds of insurance very quickly. If you fly airplanes that you don't own, if you're a renter pilot, a member of a flying club, occasionally fly a friend's airplane, you should have what's called personal non-owned, or P&O, aircraft insurance. It's colloquially called renter's insurance, but the official name is P&O, personal non-owned insurance. And it tends to be very affordable. All the companies offer it. It's very easy to get. It provides you liability coverage for bodily injury and property damage that you might cause while you're flying an airplane that you don't own. The aircraft owner's insurance is not going to cover you for that. It's going to cover him, but it's going to protect him against claims. And if something bad happened, probably he's going to get sued and you're going to get sued. And his insurance is going to provide him a defense. and pay damages up to its coverage limits if the case settles or if he winds up losing. But it's not going to help you. You need your own insurance, and that's called P&O, and it's typically pretty affordable. Some, but not all, P&O policies also include coverage for hull damage that was caused while you were flying the airplane. So in case the aircraft owner turns around and wants to recover from you, that covers you. Some even cover loss of use claims. If you do something to the airplane that causes the airplane to be down for 3 months, and the owner brings a loss of use claim against you, some policies will cover that. So again, it's important to read what the policy says. But that's P&O, personal non-owner insurance, or colloquially renter's insurance. If you're a flight instructor, you're going to need P&O coverage, but you probably also need professional liability coverage. Professional liability coverage protects you against allegations of professional misconduct or other wrongful acts. So if you have a student and the student does something stupid in an airplane and then turns around and blames you for not teaching him better, your professional liability coverage will cover you. Again, this is fairly readily available and not terribly expensive. Finally, if you're an A&P mechanic and you work on anybody's airplane other than your own, you may need general liability insurance. It's insurance that covers premises, products, and completed operations. It's the formal terminology, but it's called general liability insurance. Unfortunately, unlike the P&O and PL insurance, general liability insurance for mechanics, individual mechanics, is very, very difficult, close to impossible to get. And if you can get it, it's extremely expensive. And as a result, most individual A&Ps who aren't working for a shop but are freelancing typically go bare without insurance and hope they don't get sued. They figure they're low net worth individuals and they're probably not real attractive targets for a plaintiff lawyer. But that's a pretty risky proposition for an A&P to take. And also, if you are an aircraft owner who uses freelance A&Ps, you might want to ask them whether they have coverage, because if they do something bad to your airplane and you try to sue them, and there may not be any there. So my advice to A&Ps is don't work on any airplane that you don't own unless you're working for a shop that provides you with the general liability coverage, because it's very, very hard for an independent A&P to get such coverage. And wow, that was a long presentation, but that's finally all I have as far as prepared material, Tim. And looks like we probably have about 25 minutes or so for questions.
Thanks, Mike. Wonderful, comprehensive presentation. First question. James is wondering, will a claim increase your premium even if not your fault, like a bird strike or hail damage?
Generally not. The insurance companies do ask in your application whether you've had a claims history, and if so, you should be honest about what it was. But claims that were not your fault and not indicative of the fact that you might be riskier than usual will typically not increase your premiums.
Dean's wondering, is it true that in a case of an incident, the insurance company will first check to see if you got a weather briefing, and if not, will immediately deny any compensation, charging careless and reckless operation?
Absolutely no truth to that whatsoever. In fact, insurance is a very heavily regulated industry, and it's regulated mostly at the state levels, and these companies have to deal with all these state regulating agencies, and the laws in different states are a little different. But in general, the law says in most states that for an insurance company to deny you a claim, to deny a claim, they have to show two things. They have to show that you did not comply with one of the explicitly stated conditions of your policy. And to be honest with you, I've never heard of a policy that had a weather briefing condition written into it. And secondly, even if you didn't comply with some aspect of your policy, the insurance company, to deny your claim, would have to show that that the condition you violated was directly causal to the loss. So, for example, let's say you let your medical lapse, and then you had an accident. The insurance company can't deny your coverage for having your medical lapse, at least in most states, unless there's an indication that a medical condition contributed to the loss, which is, typically not going to be the case. So there are all these rumors that float around about how insurance companies are out there to screw their customers when they make a claim. And in my experience, none of it is true. The insurance companies go out of their way to be fair in settling claims. And the reason that they do is because if they don't and you take them to court, the judge will probably side with you and against the insurance company. That's just the way the insurance companies, the laws tend to be, the state laws tend to be spring-loaded in favor of the insured as opposed to the insurer. So they pretty much play it straight, in my experience.
Donald's wondering, who is covered by the medical payments portion?
I think anybody that gets hurt by the accident, and normally the medical payments portion is coverages are not huge, and if there was a huge medical loss, then that normally would result in a lawsuit and be paid out of the liability portion. But the idea of the purpose of medical coverage is to provide immediate compensation for people who are injured without them having to go through lawsuit.
James is wondering, for aviation policies, are defense costs generally in addition to limits or with limits?
No, they're in addition to limits, and the limit caps the amount of damages that the insurance company will pay, but their legal costs are unlimited. And that's, as I mentioned, why not a lot of these cases go all the way to trial, because it's very, very expensive to do that. So the insurance companies are highly motivated to settle these cases before they come to trial.
Robert asks, part of the liability risk is dependent on net worth, but is it true certain assets may be beyond award in civil judgment based upon state of residence of aircraft owner, and or the asset protected, such as IRA or government corporate retirement plan?
That is a question that is beyond my state of knowledge. It probably depends a lot on the individual states. And I'm not a lawyer, and it is probably a lawyer question. So I really can't. It's a good question. It's an important question, but I can't answer it.
Jeffrey's wondering, do insurance companies allow a change in hull limits mid-policy? For example, you have an engine overhaul or upgrade the avionics before the policy comes due, for instance?
It's probably possible, but I've not ever had experience with that happening. the to that's a really interesting question. I need to look into it further. You can always terminate the policy early and write a new one, and sometimes there are penalties for doing that, and sometimes there aren't. But that's actually not a situation that I've ever encountered, and I don't really know the answer to that. But that's what I'm going to try to get an answer to, because that's certainly something that could happen, where somebody makes a major improvement to the aircraft in the middle of the policy year and wants to adjust the hull coverage accordingly. I'm sure there must be a way to do that, but I don't know the details.
Cassandra wonders, can you address evaluating the amount of liability and hull insurance you should carry as a renter and as a CFI?
Well, it's a very individual thing, but I mean, I think the most common limits for liability insurance are about $1 million, and then the real question is whether there are sublimits or not. Again, if you're a particularly high net worth individual, you may conclude that $1 million is not adequate. And sometimes I've seen high net worth individuals who will buy $1 million policy and then will get a separate kind of umbrella policy to cover, I think they call it excess coverage. It's kind of a secondary policy that provides additional coverage over and above the primary policy, and I know that's doable. But the kind of the standard coverage that people get in liability policies is $1 million.
Jennifer said most individual umbrella policies have an aviation exclusion. Are you aware of any umbrella insurance policies that would also cover aviation related claims?
Yeah, I think they're specialized. I think they're not typically called umbrella policies, or they're called excess something. I forget the exact name, excess coverage or excess limits or something. And it's a separate policy that sits on top of your basic policy and that provides a higher liability coverage than your basic policy provides, and it only pays off if the limits of your primary policy are exhausted.
John's wondering, are there any agencies who specialize in experimental amateur built or experimental light sport aircraft?
Well, EAA has a big program for that, obviously. And Tim, doesn't EAA have sort of a captive brokerage as part of their insurance program?
Yeah, the EAA program is administered through Falcon Insurance Agency.
Okay,
as a
right,
broker.
right, okay.
So
I think that's the answer.
And the companies insuring those are companies that would broadly insure many different types of experimental aircraft.
Mm-hmm.
Not all, but many. Walt is wondering, does light aircraft insurance extend beyond the country border where it was issued?
Insurance, the insurance policy normally has geographic limits, and if you want to be covered outside, you need to call the broker and have him make arrangements for it. Most of the time you won't get surcharge for it, but it is a special exception that and you need to ask for it. The one exception to that I know of is Mexico, where Mexico apparently, I don't know, I don't remember the total details of this, but Mexico doesn't honor the aviation insurance policies of other countries. So if you're going to fly to Mexico, and I used to fly to Mexico a lot, I used to fly for a public benefit flying organization called the Flying Samaritans that flew medical and dental teams down to Mexico every month. I would have to, first of all, get clearance from my domestic insurance company, but I would also have to buy a special Mexican policy for the trip, and it was usually very inexpensive. But you had to actually buy a separate little policy for the Mexican trip. I'm not aware about other countries that you have to do that for, but I know Mexico was an unusual case.
Bill wonders, did I understand Mike to say that legal expenses are not limited to the policy limit?
Correct. The coverage limits, if you get, say, $1 million smooth, that $1 million is the money that's available to pay damages, and legal defense costs are over and above that limit. They are not included in that. They do not reduce that number.
Walter's wondering, and other people have wondered this also, several questions, but Walter's, any general age when the older pilot premium kicks in?
Well, it varies from company to company. As I said, 80 is sort of a magic number that above that, insurance companies typically really don't want to insure you. But I think once you get to around 70, you start probably paying some sort of a penalty for being an older pilot.
Jeffrey's wondering, as a student pilot, do I need a P&O renter's policy?
Yeah, I guess you should, because as a student pilot, if you're soloing the aircraft, you need coverage. You probably don't need coverage for the time that you're getting instruction, because if it's a typical flight school where the company is furnishing the airplane and the instructor would be deemed to be the responsible party and pilot in command in case something happened. But if you're soloing the airplane, I think you do need P&O to cover you.
Dennis is wondering, does the renter's insurance then cover a prop strike?
If the renter insurance is the kind that has a hull component to it, not all P&O policies are like that. Some P&O policies are strictly liability, but some P&O policies have a hull component. If you have a prop strike, the aircraft owner's policy is going to pay to deal with the prop strike. The risk is that the aircraft owner's insurance company might subrogate against you and say, well, it was your fault, and so we shouldn't have to pay this. We did pay it, but we should be able to recover from you. And that's really what the hull component of a P&O policy does, is it gives you protection against subrogation actions.
And subrogate, that's a big word. Could you just describe that just a little bit? You briefly did there, but what does that really mean?
Subrogation basically means that one party's insurance company sues to recover a claim that they paid from somebody else. For example, let's say my airplane has a gear up. I have insurance, it's going to pay for it. But the insurance company determines that the reason I had a gear up is because the last mechanic that worked on the airplane messed up the gear system. So my company, at its option, and it will decide whether it's worth the trouble to do this, depending on the size of the loss, might turn around and bring a lawsuit against the shop that worked on the airplane and said, we had to pay this claim, but it really shouldn't have been our responsibility because you're the guys that messed it up. And it's up to the insurance company to decide whether it's worth bringing a subrogation action, because obviously there's legal fees and so on involved in doing that. So they probably wouldn't do it for a small claim, but they might well do it for a big claim, especially if there was injury or wrongful death or something involved.
James is wondering, is a passenger waiver of liability any value to the airplane owner?
Again, that's a lawyer's question. The sense that I have gotten is that passenger waivers are not enforceable, particularly if the passenger gets killed, for example. That the fact that he signed a waiver does not bar his wife or his kids from bringing an action against you. And now, again, that's a lawyer question. I can't give you a definitive answer, but that's sort of my impression, is that the passenger waivers are not really enforceable.
Albert says, my insurance offers a discount for FAA Wings awards. What other practices can reduce premiums?
Well, I know that I seem to recall, for example, that there's a carrier or two that offers a premium discount if you go through a King School's risk management course, that sort of thing. But some policies, for example, a lot of the time when I was insuring my twin, the insurance company either required or offered a significant discount if I went through recurrent simulator training once a year. And at renewal time, I would have to demonstrate to them with graduation certificates that I'd gone through that training. I never ran into that before I started flying a twin. So it may be that for smaller airplanes, they don't do that. But the bigger the airplane and more complex the airplane you fly, the more likely it is the insurance company is going to have special recurrent training requirements over and above the standard, flight review that the FAA requires.
Seems like that'd be a great question for your broker, doesn't it? What can I do to reduce my premium?
Yeah, and again, the answer is probably different depending on what underwriter is involved.
Yeah. Andrew wonders, is there any significant premium benefit for BRS full plane parachute systems?
Not that I'm aware of. I mean, the most populous airplane with that system obviously is the Cirrus SR-20, SR-22, and the Cirruses don't seem to get any sort of a price break because they have a built-in parachute system.
You got any idea when those parachute systems are activated, the ones that made it, were any of those fixable, or were they all total losses? Any idea?
No, they're not all total losses. I pretty much followed all of the Cirrus ones, and the system has a remarkable save record. I think in the when was it? It's getting close to 20 years since those airplanes have been built. I think there have only been 2 or 3 parachute deployments where the people didn't walk away. The vast majority of them, the parachute saved the day.
Mm-hmm. Paul wonders, I own a plane and have my own insurance. Do I need additional anything if I also rent or fly a friend's aircraft?
Yes. You should have P&O insurance if you fly a friend's aircraft. The only exception to that would be if you were flying, and you have to check the terms of your policy. But normally, insurance on an airplane you own will provide some sort of coverage if you're flying a substitute airplane because your airplane is down for some reason. And so you may have some coverage in that case. But if you just casually fly a friend's airplane, even though your airplane might have been available, your insurance probably won't provide any coverage for that.
Comment here from Jerry. You said, my broker offers a discount for membership in EAA and AOPA. So that sounds good. Okay, we're getting close to the end here. Question from Ted. Rather than an individual owning an aircraft, does it make more sense to insulate one's assets by forming some sort of shell company to be the owner of my aircraft?
Well, an awful lot of airplanes are owned by corporations or LLCs that were formed specifically for that purpose. But it's, and again, this is a lawyer's question. But if the company, it was formed only for the purpose of encapsulating the airplane and doesn't have a genuine business purpose, it usually doesn't provide very much protection. You know, if something bad happens, particularly if you're flying the airplane, you have a crash, you can guarantee that the company that owns the airplane and you individually are going to both be parties of the lawsuit. If it's an airplane that you own but don't fly, that you have a professional pilot or something, then having the corporation would provide you a little bit more protection. But most of us fly our airplanes, and so we're personally exposed no matter what we do.
Well, great information tonight, Mike. Thank you so much. Please take a moment, share closing thoughts. On my counter, I probably saw about 430, 440 tonight were logged in.
Very good. Well, my big closing thought is that finally, my new book, Aircraft Ownership Volume 1, is now available. You can buy it now on Amazon along with my other two books. We're going to have a whole bunch of them up at AirVenture. If you're coming to AirVenture, both at the EAA warehouse and at the Aircraft Spruce, we'll both be carrying the book at the show. And they have me scheduled for 3 book signing things, I think Monday, Tuesday, and Friday afternoon of AirVenture. So if you have any of my books and you're going to be up at AirVenture and you want to get them autographed, there'll be those opportunities to do it. The volume 2 of Aircraft Ownership, volume 1 came out to be just shy of 500 pages long, and volume 2, which will also be a comparable size, we're going to try to make it available by about Christmas of this year. But volume 1 is available now, and the early reviews are very, very positive. So just wanted to let you know about that. And finally, the next 3 of my webinars, the August webinar, which will be on the 7th. Hopefully I'll have recovered enough from AirVenture by then. It's called I Want to Sue Someone, and it's kind of a story of an aircraft owner who had something bad happen to him and contacted me to see if I would help him with suing the manufacturer, and kind of how that tale went. It's kind of an interesting story. September webinar is titled Double Standard, and I'm going to be talking about the differences between how the FAA trains and tests pilots and how the FAA trains and tests mechanics. And I'm going to be making a case that I think that the pilots get much better training and testing, and mechanics get much inferior training and testing, and that system really needs to change. And finally, the October webinar called the FAA Safety Continuum is going to talk about one of the basic fundamental philosophical principles of the FAA, which is called the safety continuum, having to do with the fact that different aircraft are held to different levels of safety. And we'll talk about how that all works and what it means with respect to the airplanes that we fly, and how the requirements for things like maintenance are relaxed for smaller airplanes compared to bigger airplanes, and for non-commercial airplanes versus commercial airplanes. And there's a lot of confusion in that whole area. Even FAA inspectors are confused by it. So that's what we're going to be devoting the October webinar to. And with that, Tim, I am out of things to say.
Hey, great. Thank you, Mike. That was a really informative presentation. Boy, I know more about insurance than I did before, and other people just commented the same thing. So thank you very much. Everybody who logged in tonight, thank you all so much for joining us. Have a wonderful evening, everyone. Enjoy you, and hope you can join us next week.
Thanks, everybody. And I hope to see some of you up at AirVenture.